Welcome everyone to the CFO Swinger Watch Report technical analysis video for the week of December 30th through January 3rd. Now, if you guys want to know the top-down approach to how we generate the following actionable swing trade ideas, make sure you guys read the entire report first before you watch this technical analysis video. The following research provided in this week's report is to be applied to the given swing trade ideas so that you can execute without worry, as long as you follow and act on the entire 3-point game plan to a T, which is also given to you in great detail within the report. With that, let's get into the market. So this is the weekly time frame of the S&P 500 ETF, or ticker symbol SPY. Now, for the last 2 weeks, we have experienced elevated market volatility, and we know that just from looking at the VIX or the volatility index of the S&P 500. Now, specifically for last week on this weekly candlestick, we had a very nice looking inside weekly candlestick. And this inside weekly candlestick usually suggests that we should be seeing a continuation of the underlying price trend. Now, interestingly enough, the current underlying trend is an uptrend. That's right. Even with the price action that we've seen for the past 2 weeks, including last week, we are still in an uptrend on the weekly time frame. Why? Well, first of all, the weekly 10 SMA, this red line, is still curling to the upside, and the weekly 21 SMA, this light blue line, continues to curl up higher to try to catch up to the price. Now, obviously, from 2 Wednesdays ago, we had this very large move and very quick move as well to the downside, and it looked like a very good potential structure break to the downside. And again, we have a current uptrend structure that we're still seeing since the price continues to stay over this weekly 10 SMA. Now, this is great and all. However, if we take a look at the volume and the price action together, it does seem like we're about to see a continuation of a potential break of this current uptrend to the downside. And so if you just completely forget about my weekly 10 and weekly 21 SMAs, and just focus on the price action alone, it does seem like we're about to see a continuation of a downtrend break. And so what we're seeing here from last week is a potential continuation trend to the downside on the lower time frames rather than the higher time frames like this weekly time frame. Now, from last week, we did have a rejection at the $600 psychological whole number level. And it just seems like from last week's price action, we were just seeing a simple consolidation that led into a retest of a previous breakout level, again, a breakout to the downside of this psychological whole number level of $600. And the reason being is that, well, we did see a complete rejection from this $600 level, and we ended up 5 points below this specific whole number level, closing at $595.01 last week. Now, the story will be completely different and the analysis will be completely different had SPY closed over $600 and closed near the highs of last week, which was at $602.48. However, we are not in that current situation, as we are still sitting very close to the weekly 10 SMA, which further gives us more risk to the downside, as it seems like buyers are not willing to hold over the $600 psychological whole number level, or at least stay within the vicinity of this level. So currently, from all-time highs, okay, we have moved about 2.30%. Okay, so we're not even within the ranges of a technical textbook breakout. And if you guys remember what I've said, I am expecting at least minimum a 10% correction as we head into next year. And so a 10% correction is somewhere around here. All right. And as prices have continued to move higher and higher and higher, setting up a new all-time high price for me to look at this potential 10% correction, we have moved from previously a 540 level to target as a 10% correction all the way up to now around a 547 to 548 target for a 10% correction. And so this makes sense to me because from current all-time high levels, okay, we have yet to see another all-time high price being made, especially after 2 weeks ago when we had this big move to the downside accommodated by this large selling volume. And on top of that, we're still seeing my weekly 50 SMA, this dark blue line, continuously rising up higher. And previously, when I did have this 540 level in mind as our perfect 10% correctional move to the downside, the weekly 50 SMA was still well below this 540 level. And so if we continue to move down from this point forward, I'm going to be expecting a lot of buyers to try to defend the line here of this current uptrend that we are in. And especially, I expect the buyers to continue to try to hold above my weekly 10 and the weekly 21 SMAs before we see that eventual breakdown of both of these weekly SMAs so that we can officially retest the weekly 50 SMA. Now, this is if and only if we continue to move to the downside, of course. And so for this week, right, since we did have a pretty good rejection from the $600 whole number psychological level last week, if you do see a break below the weekly 10 SMA, we should be seeing another retest of this major previous all-time high resistance level of 585. And this will be a good line in the sand retest for buyers to try to defend this level. But if we don't see enough buyers coming in and enough sellers coming in, rather, we will see the price breaking below 585 and it will head straight for the next major previous all-time high resistance level sitting at 574.50, yet another whole number level. And at that point, we'll try to see if the price will be holding above the weekly 21 SMA or not, because if we are aiming for 574.50, well, at that point, the price would have broken below, or it will be breaking below the weekly 21 SMA. Okay, so obviously this is a lot more speculative from this point forward, but again, just for this week, if we are to continue to reject below $600 and continue to move lower, we will see an eventual retest of 585 this week, even if this week is yet another short trading week. All right, so here's our first and last swing trade idea for this trading week. Ticker symbol CRDO or CRDO Technology Group Holding Limited. Now, I don't know if it's pronounced Credo or Credo. Who cares? We're just trading the company's share price. So I want to take a look at this one because it's been holding so well during elevated market volatility, and the fact that it has been holding above its earnings gap up as seen here clearly demonstrates some very good relative strength. Now, the reason being for this ticker being in this week's CFO Swinger Watch Report is that, well, the price is now officially retesting with both of my daily 10 and 21 SMAs. So both of my momentum short-term SMAs have fully caught up to the price after that major power gap up due to earnings. And so with this consolidation, I expect CRDO to continue to move up higher as long as it's able to hold over the daily 21 SMA. And so if you're able to see a continued bounce as we saw last Friday, we should be able to break over this $72 whole number level, which is the reason why I gave you guys an entry point over $72.50. Well, specifically, the 50 cents matters because if you take a look at the previous candlesticks here and where rejected, we are seeing the highs of these two candlesticks sitting at 72.30 and 72.27. And so we want to be over these previous rejection levels or price levels. And so a 72.50 entry point will be an official confirmed move over this previous resistance level. And so for CRDO, it's pretty simple here. As long as we stay and stick close to my daily 10 and 21 SMAs, and especially as long as we stay over this daily 21 SMA, we should either continue to move sideways, which will also be ideal, or we will break over the 72.50 resistance level with a lot of volume and continue to retest the next major resistance level sitting at 75.50. And ultimately, we can continue to make new all-time highs as long as we're able to break over every major resistance level that we're seeing right now as the price continues to move sideways and stays over this power earnings gap up. Now, this entire sideways consolidation that the price has been seeing after earnings will be broken if the price breaks below this $64 whole number level, right? And the reason being is that, well, if you break below and stay below the earnings gap up lows, well, that just means that buyers are not strong enough and the sellers are willing to continue to try to fill in this massive gap up area. And so for price targets for CRDO, we should be seeing a potential for this name to reach $100 per share based on its fundamentals and just based on the entire bullish momentum and sentiment that has been able to help this name to continue to stick around to its current all-time high levels and move sideways, even with the overall market conditions not looking too good with elevated market volatility as well. And so from last Friday's closing price all the way up to this whole number level of 100, that is a potential for a 44% return for the next couple of months, depending on how long it takes for the price to get up to this 3-digit number. All right, so make sure you guys read the report as well to read the entire top to bottom analysis along with the extra technical and even more fundamental analysis on this ticker. And of course, if you guys want to know the 3-point game plan for this ticker as well, if you guys choose to use equity rather than option contracts, please read the report as well. All right, so that is it for this video. If this technical analysis video was insightful, make sure you guys leave a like down below. But if this video was applicable, make sure you guys subscribe as well too by hitting that subscribe button down below. Now, if you are watching this video when it just became public and you want to watch this video a day earlier when it's private, all you need to do is become a part of the many readers of the CFO Swinger Watch Report and a private member of the private CFO Discord community. You can get 50% off for your first 30 days. It's a first come, first served basis. So all you need to do is DM me on Instagram at ChartsFocus1 to claim your spot. Good luck, and I'll see you all tomorrow morning.